and welcome to the CNBC TV 18 special. We're talking about the big deal in the Indian aviation market, SpiceJet and Boeing joining hands to increase SpiceJet's fleet capacity by almost 4 times. Ajay Singh and Dinesh Keskar here with us on the CNBC TV 18 special. Gentlemen, appreciate you joining us, and once again, congratulations on getting this deal done. Mr. Singh, if I could start by asking you about what this means now for SpiceJet, if you can also give us or help us understand, because 2018 is when we actually see the addition to your fleet capacity. What is this going to mean now eventually as far as market share is concerned and your game plan for India?
I think what this signals is, in a sense, a culmination of the revival process that we undertook in 2014, in December of 2014. As you know, the airline had nearly shut down in December 2014, you know, we've come a long way since then. We have performed consistently well. Our load factor has been high for 21 months. We've exceeded 90%. We have been profitable in the last all the 7 quarters in this last 2 years. We have had the best on-time performance. We have had the lowest cancellations. We've consolidated what gains that we had achieved in the last 2 years, and now we feel that this is the time for growth. We have spent the last 1 year trying to decide which plane to grow with, and we have decided that Boeing and the MAX plane is the right plane for us. Basically, this is the largest deal for SpiceJet in its history. It's also the largest deal for Boeing in India. We feel this gives us a terrific platform to grow both domestically and internationally for several years to come. What this deal also does is it helps us reduce our cost, and that was incredibly important for us. This deal means that we get lower cost aircraft, we get lower cost maintenance, we get a more reliable aircraft, we get a much more fuel efficient aircraft, an aircraft which is 20% more fuel efficient than the existing plane. We get an aircraft which has a larger range and therefore enables us to get to more destinations. We think it's a fantastic fit for SpiceJet, and we are delighted to be able to do this.
Well, there are several things that you've talked about there. Let me pick up on each of those, and let me start by asking you about the cost advantage that you just spoke of. And of course, the low cost, the cost benefit on account of this being a very fuel-efficient aircraft is going to be a significant one, given the fact that we are now seeing commodity prices on the uptick. But can you quantify for us what this could eventually mean as far as cost reduction is concerned, and then the implications for your margins, which have been on an upswing over the last 7 quarters?
Yes, you know, like you said, commodity prices have been on an upswing, and we don't think they're going very far, but still we need a hedge against those commodity prices rising. And for that, it's incredibly important for us to bring down our unit cost. Now, the significant elements of unit cost are fuel price, the lease, the cost of the plane itself, the financing cost of the plane, and the maintenance cost. These are the big ticket items as far as cost is concerned. This order enables us to improve on each one of those 4 items. In terms of fuel, this aircraft is 20% more efficient than our existing fleet. On a per seat basis, this is more efficient, we believe, than planes which were offered to us by Boeing's competition. In terms of maintenance cost, what we have done is that along with negotiating the price of the plane, we have also negotiated maintenance contracts on a long-term basis that will help us reduce maintenance cost. Of course, you know, Boeing has made an aggressive offer, and therefore we have been able to bring down the cost of the plane itself. And we think that we are in a great financing market. This is an eminently financeable plane, and interest rates are low across the globe, and this is a great time to go into the market to finance the plane. So if we can bring down that cost as well, I think on a sustainable basis, we've brought down significantly the cost of the unit cost of operations at SpiceJet, and this is incredibly important.
So if we were to assume that fuel prices will remain where they are currently and not move significantly higher, maybe between the $55 to $60 band. You know, I'm just trying to understand what the margin trajectory could be, because it's currently at about 7.9%. What would it imply as far as your margin is concerned?
What this does is over a longer period of time, because remember that there's going to be a mix of fleet. There will be some new planes, but there will also be old planes, and then as new planes build up, I think we are looking at anything like a 15 to 17% reduction in cost.
15 to 17% reduction in cost. Has he been able to drive a very hard bargain, Mr. Keskar?
Absolutely. I think I'm going to use him as my next salesman. You know, he told you all the right things about why he bought the plane, but that is indeed true. You know, and I think we are delighted at Boeing because SpiceJet is an important customer. We go back inception of the SpiceJet. We've been with them, and the fact that they showed the confidence in Boeing, we are quite pleased. And of course, it enhances our footprint in India, which is a huge market, one of the fastest growing market in the world today.
You were talking about the India market and this deal enhancing your footprint in India. And I know you've always been very confident and optimistic about the future of Indian aviation. But given where we stand today, give me a sense of what the outlook for growth is.
Well, see, we think in the near term, the outlook for growth is about 15%. And we just did our annual forecast, as you know. And our current forecast is for the next 20 years, 1,850 airplanes for India worth $265 billion. So we continue to stay bullish on India, and we think if the infrastructure keeps in pace, we will probably outpace these numbers. So we are pretty firm that India is going to be the future, and China and India are the two big economies that are going to grow the world aviation.
But still no comparison between Chinese aviation and Indian aviation, right? Just in terms of size and numbers.
True, but listen, if we were talking this 5 years ago, I would have readily agreed with you. But now we are coming close. The gap is closing, and I think people.
What is the current gap?
I think current gap is about 3 to 1. Which is not too bad. At one time it was 10 to 1. So India is today where China was 7 years ago. So that's what the paradigm is.
Okay, so playing catch-up. Mr. Singh, you talked about how you are exploring several options in order for you to be able to finance this mega deal. What seems to be the preferred route at this point in time? I mean, and what will the implications be as far as your debt is concerned? You have a debt of a little over 1,000 crore rupees today. What could this imply for debt?
Well, as you know, SpiceJet today is a near zero debt company. The 1,000 crores that you talk about is the debt which is backed by assets. These are the Q400s which are on our balance sheet. Now, in terms of financing, of course, one of the avenues we will look at is a sale and leaseback of planes. Going forward, we will also look at financing some of these planes and putting them on our books, backed by EXIM guarantees and other such mechanisms. You know, for us it's important at this time, while there is no paucity of funding available, we need to see what works the best for us in terms of lowering the cost
I would imagine sale and leaseback would be the most preferred.
That is, at this time, appears to be the more preferred option, because obviously one of the advantages of that is that it ensures that there is no dilution of equity, there is no increase in debt of the company. This is a great market to be doing this, and we are hoping that even in those situations we bring down the effective cost of lease. Because, you know, right from where we started this journey in December 2014, our attempt has been to bring down the average cost of lease of planes. And this deal will, I'm confident that this deal will enable us to get that cost down even further.
How much could you expect further reduction?
I don't want to put numbers on it, but it's looking very good. I mean, we've already started to get offers on this, and it's looking a lot better than it was even a year ago.
Okay. You know, you talked about what this will mean then as far as your international aspirations and your international expansion plans are concerned. How soon can we realistically expect those to fructify?
Well, as you know, today SpiceJet already has 25% of its capacity on international. We continue to look at international and how to expand international. You know, we are looking at routes in a holistic sense and saying, look, is this route going to make more money for us, or is this other route going to make more money for us? We are not so, you know, fussy about whether that's a domestic route or an international route. What this aircraft does for us, however, is that it increases the range that we can fly. If an NG could fly up to 4 hours, this aircraft can fly 5 hours. So that expands the footprint and therefore enables us to go to some international destinations that we could not have gone with our existing fleet. So we will evaluate those opportunities as the aircraft start to come in.
But, you know, say over the next 3 to 5 years, what kind of mix do you expect between domestic and international operations in terms of revenue?
It depends on what turns out to be more profitable. You know, you know, my expectation is that several of the domestic routes will do incredibly well, especially tier 2, tier 3, the smaller towns connected to larger towns, or even the small towns connected to other small towns. And some of the international sectors which are doing well today will continue to do well, and we will discover yet undiscovered markets, which will be extremely relevant.
But would it be fair to say that maybe over the next few years the focus will continue to be largely on India, given the fact that this is in that sense the high growth market?
Well, India is a high growth market, but India is also an extremely competitive market. And again, you know, our focus has really been largely into tier 2 and tier 3. Of course, tier 1 to tier 1 is really saturated at this point of time. There are also infrastructural constraints. So we will see, but you know, our intention is to increase our international share over time.